Hi, my name is Fatin Amalin binti Mustapa and my group members is Zetty Zulaika binti Baktiar, Tuan Arissa binti Tuan Zamri and Cariessa Serafiena binti Ahmad Affendy. We are from MAC 220B4L Group 5 and today would like to present topic segmental and interim reporting MFRS 8 and MFRS 134. We are choosing CIMB Group Holding Berhad for our assignment, and here is the company background of the CIMB Group. The company known as Commerce International Merchant Banker (CIMB) was founded in 1924 with name Bian Chang Bank, and later in 1986 it was changed to CIMB after acquisition by Bank of Commerce, and after a year it was successfully listed in Bursa Malaysia. The CIMB Group business model is organized primarily across the following areas: consumer banking, corporate and institutional banking, and market and group asset management, insurance, and takaful. Next, the CIMB mission is to invest in their people to derive a culture driven by innovation to deliver quality service and produce superior returns and values to the stakeholder.
I will presenting the management approach factors to consider having a segmental reporting. It consists of nature of business of activities, existence of managers responsible for the activities, and information presented to the board of directors. Without further ado, looking at the first factor, it is identified by any activities carried out by an entity with the main objective of profit maximization. The second factor is each segment is controlled by the segment manager who are responsible for ensuring the performance of the segment and making direct contact with the chief operating decision maker, which is CODM. As for CIMB, since the company is Malaysia's second biggest bank in terms of market, each division will be monitored by a divisional managing director to control the department. Performers also are reported to the top management on a regular basis. So for the third factor is information presented to the board of directors, such as financial statement in order to make better decision making. So the board of directors will be able to ascertain whether the segment should continue, discontinue, or replace with a new segment that can provide more earning to the company. So looking back to the nature of business activities, the factor must be taken into consideration is nature of the services, type or class of customer, and method to provide the services. For nature of the services for CIMB Bank, it consists of consumer banking, commercial banking, wholesale banking, and CIMB digital assets and group funding. For type or class of customer, it based on geographic segmentation, which including Malaysia, Indonesia, Thailand, Singapore, United Kingdom, Hong Kong, China, and other countries. And lastly, for method to provide the services, it anticipates the customers' needs and preference and offer the products and services as the client's requirement. So basically, CIMB Group Holding Berhad consists of two types of segment, which is business segment and geographical segment. For business segment, it is a unit of an entity that is engaged in providing product or services. So the core business that were run by CIMB Group is including consumer banking, commercial banking, wholesale banking, and CIMB digital assets and group funding, which is previously known as group ventures and partnership and funding. So the other segment, which is geographical segment, is a unit of an entity that engage in providing product or services within a particular economic environment. So CIMB Group Holding Berhad has separated their geography segment based on location and region, which consists of Malaysia, Indonesia, Thailand, Singapore, United Kingdom, Hong Kong, China, and other countries. So next we move to the Chief of Decision Making, CODM, and its responsibilities. So as for CIMB Group Holding Berhad, the Chief of Decision Making is Dato' Abdul Rahman Ahmad, who is the representative of Group Chief Executive Officer. So CODM for the purpose of reviewing performance and in determining how resources should be allocated. To be considered as an operating segment, a component of financial information concerning its operating result must be sufficiently precise to allow the CODM to make resources allocation decision and evaluate its performance. So the next responsibilities is CODM essentially controls the management committees, and therefore the CODM has control over the operating decision made. So an operating segment is likely to be a component of the entity that the CODM reviews on a regular basis. The extent to which the operating result of business units are combined for the purpose of evaluation by the CODM is a crucial problem in designating operating segment in practice. So, it also being held by 4 other divisional managing director for each segment as mentioned in the table.
The process for reportable and non-reportable segment is an entity is required to disclose information about a segment separately if it meets any of the following quantitative thresholds. First, its reported revenue, which include both sales to external customer and inter-segment sales or transfer, is 10% or more of the total revenue of all operating segments, including internal and external. Second, the absolute amount of its reported profit or loss is 10% or more of the greater in absolute amount of the combined reported profit of all operating segments that did not report a loss. Third, its assets are 10% or more of the combined asset of all operating segments. Next, operating segments that do not meet any of the quantitative threshold may be considered reportable and separately disclosed if management believes that the segment information would be useful to financial statement users. In addition, an entity may combine information about operating segments that do not meet the quantitative threshold with information about other operating segments that do not meet the quantitative threshold to produce a reportable segment only if the operating segment have similar economic characteristics and share a majority of the aggregation criteria. If the total external revenue reported by operating segments constitute less than 75% of the entity's revenue, additional operating segments shall be identified as reportable segment until at least 75% of the entity revenue is included in reportable segment.
As stated in MFRS 8, an operating segment is required to be reportable if they meet the quantitative threshold test, which is 10% threshold test. Therefore, in identify whether it is reportable or non-reportable segment, 10% threshold test must be done. There are 3 ways in order to identify whether it's reportable or non-reportable, which is using revenue, profit, or asset. So for CIMB Group Holding Berhad, we decide to test on asset. So the formula for this calculation is segment asset of an operating segment divided by the combined asset of total of operating segment times by 100%. So in this slide, we can see that consumer banking, wholesale banking, and CIMB digital assets and group funding is considered as reportable segment because it has more than 10%. Therefore, for the commercial banking is considered as non-reportable segment because it has less than 10%. In the previous slide, we have calculated the 10% threshold test. So according to the 10% threshold test, 3 out of 4 of operating segments are reportable segments. So from there, 75% threshold test needs to be done. In this test, the combine of external revenue of the reportable segments must be more or equal to 75% of the entity's external revenue. If the test did not achieve 75%, we must find additional operating segment until it meets 75% of entity's total external revenue. So below the table, it has the calculation. So the calculation is the total external revenue of reportable segment, which is 4518089 divided by the total external revenue amounting to 5497726. So it results with 82.18%, so which is more than 75%. Therefore, it complies with 75% threshold then. So here is the new segmental report. The segmental report is categorized under two segments, which is first is the reportable segment and the second one is the other segment. As you can see on the slide, the consumer banking, wholesale banking, and CIMB digital asset and group funding is categorized under reportable segment, and for the commercial banking is categorized under other segment. And also you can see the total revenue of all segment is 5497726. For the total profit is 3586131, and the total asset is 612382907, and for the total liabilities is amounting to 552678094. Advantages of segmental reporting. So I will be explaining on the advantages of segmental reporting first. So the first one, shareholders able to gain the overview of the firm's operation, because the segmental report show a detail and all the perspective that have been taken into consideration by the management in making their decision. So the second one is shareholders able to gain information about company business. This can help them to know the business process that they operated by the company and help them to evaluate the company's performance. So the third one is investors are exposed with future plans of the company. So they will get better understanding about the company in order to make a clear decision about their investment. So the last one is the revenue identified separately. So we can see that on the previous slide, revenue of each segment can be identified separately. Explaining on the disadvantages of segmental reporting. So the first one is the company should be prepared to bear the chance of losses. This is because they must be prepared for any type of risk that will be happen in future, such as their decision and action taken will be based on the short-term period. So the second one is there is a possibility that the data will be manipulated because the leader has more authority on the company's software. So the last one is the misuse of authority. This can lead to destroy the company's stabilization and the company's image because the report has been manipulated.
For the basis preparation of interim reporting it is prepared under historical cost conversion, financial asset at fair value through profit or loss, debt instrument at fair value through other comprehensive income, equity instrument at fair value through other comprehensive income, derivative financial instrument and non-current asset, disposal group held for sale, and financial liabilities which will be valued at fair value through profit or loss. Next, the unaudited condensed interim financial statement has been prepared in accordance with MFRS 134 interim financial reporting. The unaudited condensed interim financial statement should be read in respect of the groups and the company audited financial statement. The explanatory notes in the condensed interim financial statement provide an explanation of events and transactions that are significant to understand the changes in the financial position and performance of the group and the company since the financial year ended 31st December 2020. The related accounting policies and method of computation applied in the unaudited condensed interim financial statements are consistent with those adopted in most recent audited annual financial statements for the financial year ended 31st December 2020. In preparing the interim report, there are two accounting policies used. First is depreciation method and second is recognition of goodwill. For the types of interim report, the company's interim report are condensed financial statement prepared in quarterly report.
So I will be explaining on the period for the current and comparative period for each statement. So as for the statement of financial position, for the current period, it will be on the 30th June 2021, while the comparative period will be on 31st December 2020. As for the statement of profit or loss and other comprehensive income, it will be 3 months ended, second quarter, which will be on 30th June 2021, while the comparative period will be on 30th June 2020. For the statement of changes in equity, it will be on 30th June 2021, 3 months ended for the second quarter, and for the comparative period it will be on 30th June 2020. And last but not least, for the statement of cash flow, for the current period will be on 30th June 2021, and for the comparative period will be on 30th June 2020. Moving on to the next slides, for the amendments of MFRS 116. The company CIMB Berhad has its own office building which it uses for admin purposes, and it has a carrying value of 2,366,359 ringgit. The company adopts the revaluation model for its office building. On 1st January 2020, the building had a remaining useful life of 5 years. And after a reorganization on 1st January 2021, the property was rented out to a third party, Malasalam Berhad, and reclassified as an investment property. CIMB Berhad has adopted the fair value model in the subsequent measurement of its investment property. The fair value of the property was 3 million on 1st January 2021 and 3,680,000 on 30th June 2021. The question is, will it be a fair value gain or a fair value loss? So as we can see on 1st January 2021, there is a transfer from PPE to IP since there is a change in use from owner-occupied property to rented out. The carrying value of the PPE on the date of the transfer is 1,893,087.20, which resulted by the carrying value minus the accumulated depreciation by the remaining useful life of 5 years. The difference between the carrying value and the fair value resulting to a surplus of 1,106,912.80, resulting by the fair value minus the carrying value on 1st January 2021 recognized in the ARR, and the deemed carrying value of IP was 3 million. Since IP using a fair value model, so there is no depreciation. For the year ended 30th June 2021, there is a gain of 680 million recognized in SOPL. Here is the extract of statement of financial position as at 31st December 2020 and 30th June 2021. As for the property, plant and equipment, for 31st December 2020 will be the carrying value of 2,366,359 ringgit, while for 30th June 2021 will be 0 because there is a transfer from PPE to IP on the date of the transfer. And for investment property, as for 31st December 2020 will be 41,000 as we can see from the financial position. And for 30th June 2021 will be 3,041,000 because there is a transfer from PPE to IP, and 3,041,000 resulting from 41,000 plus 3 million of the fair value of the investment property. Moving on to the next amendments of MFRS 108 in 2021, after the entity's 2020 financial statements were approved for the issue, the entity discovered that as a result of computational error, the depreciation expense of 2020 financial statements were overstated by 36,000, and assumed that the balance of the retained earnings at 1st January 2021 before the discovery of the error was 1,398,626 ringgit. What we can do for the computational error? So the depreciation of 36 million, which is overstated in the 2020 financial statements, is a prior period error. So the misstatements in the entity's 2020 financial statements arise from the mathematical error. The effect of correcting the prior period error must be presented as a restatement of retained earnings at 1st January 2021, which will be the beginning of the current reporting period. The adjustments for the amendments of MFRS 108, which will be the retained earnings on 1st January 2020 of 1,398,626 ringgit, will be added up by the prior year adjustment, which is the depreciation expense overstated by 36,000, which will be resulted in the restated retained earnings on 1st January 1,626 ringgit, will be added up by the prior year adjustment, which is the depreciation expense overstated by 36,000, which will be resulted in the restated retained earnings on 1st January 2021, of 1,434,626 ringgit.